Hey everyone, thanks for checking in our latest Traded Black podcast. I'm your host, Shad Dales. Earnings season, we keep this rolling along, and our next guest and company we want to feature on is MariMed, who posted positive cash flow for Q2 and increased their Adjusted EBITDA margin. So how they do it? Well, we'll find out as we welcome in CEO Jon Levine. But first, let's welcome in AV here on a Monday morning. Good to see you, sir. And this company we talk about here and there, and they've got strong brands. They rank very strong in the markets they're in, like Illinois, Maryland, Massachusetts, but they've got some great IP, I think, for sure. And they've also gotten into the functional mushroom space too. So, and then Delaware went live too, which we early reports showing that first weekend did very, very well.
Yeah, brands are going to be important moving forward. I mean, I think brand power is what's going to propel companies for future success. And I mean, they have seen success in the markets that they've entered from a branding perspective. They've proved that Betty's and Bubby's do work. And I mean, consumers do have an affinity for buying them.
Yeah. So let's welcome him back. It's been a while, but good to see him back. Let's welcome in the CEO of MariMed, Jon Levine, back to the podcast. Good to see you, sir. It's been a while, but how are things?
It's great to be back. I haven't seen you in so long, the two of you. It's great to be back with you both.
Yep.
I know. What do you make? Like, we'll get into company specifics, but it's nice to see all this chatter regarding the industry, all this stuff that I don't know what's going to happen in Washington, but there's a lot of attention, don't you think, right now pertaining to the space?
Yeah, there's a real lot of chatter out there on what's going on in Washington. And as I said during our earnings call, I was always one to hold back on saying anything positive about it because it never comes true. But I do feel that there is some real legs on this last round of chatter, and we're all getting excited about it.
Yeah. Yeah. And there's a lot of people that I think agree with your sentiment. But yeah, the longest time we've all been there before about not getting your hopes up too high. But hopefully we do see some change. But let's get into it. Your latest print, Q2, MariMed generated sequential growth across both wholesale and retail and was cash flow positive, total revenue of $39.6 million. You credited strong execution in Massachusetts, a full quarter contribution from Delaware, and disciplined expense management for that performance. So what drove the sequential growth in positive cash flow in Q2 that you have basically experienced and announced last week?
Yeah, well, I mean, despite the challenging environment that we've been working in, I mean, the whole economy thing, I mean, we're really pleased with the top line growth and the earnings. But we're making a lot of progress in our growing as a powerhouse in the cannabis CPG company. We have seen increased revenue in Massachusetts in our wholesale business. Our brands are still continuing to grow in every state that we're in. And, we're maintaining the penetration into 100% of all retail stores in Maryland. So we're growing in every state still. I mean, Massachusetts, we increased the number of stores that we're in that are open, even with the amount of stores that are closing or going under in Massachusetts without getting burnt. In our retail revenue, though we have a lot more competition in Illinois, we have seen increase in most of our stores, and we're really happy that our loyalty program is really starting to pay off and keep seeing increases on a quarterly basis in the loyalty program, which helps our AOV, even though most people don't have that excess cash to spend. We did have some hiccups, like in Illinois, with the conversion of the metric system, which did slow down some of our ability to ship for a couple of weeks. And then, the Missouri, as we mentioned, has not performed as we would have liked because it's a very difficult market with everything there with the reciprocity and how they operate that market. So we're very happy with how we've done, and we're looking forward to the next couple quarters.
Well, I actually spoke to your chief commercial officer last month, Ryan Crandall, and he outlined a number of things just regards to branding. And number one in Massachusetts, number one Maryland, there was as many as 220 brand ranking in Illinois for Betty's Eddies, which re-entered that into that market a year ago. It's now top 5. So you guys have done very, very well. With that, you reported Adjusted EBITDA of $4.9 million. It represented a 12% margin, which was up from 11% in the same quarter last year. You outlined that the improvement was highlighted the company's focus on operational efficiency and disciplined execution. So how sustainable, Jon, is this margin, and what's really driving it right now as far as profitability is concerned?
Yeah, as Ryan was speaking to you, he was talking about how in Q1 he and his team implemented a number of initiatives so that we could operate more efficiently. And we had to deal with the fact that in Q1 we took on bringing Delaware in, and that lost our high margin income of the management fee and rent, but it created additional revenue that we could report in their retail. So we've been absolutely concentrating on the margins and the expansion of our wholesale into Illinois and Delaware.
Mm-hmm.
The adult use coming in, sorry, I said Delaware twice now, but the adult use coming soon in Delaware, in MSA in the future with PA, we see that we can increase our margins and continue that leverage. We have to improve or do something with Missouri and be very continue being very disciplined with our financial management of expenses, which we've been proving all along that we can adjust as the market needs us to.
And John, one of the surprises of the quarter was seeing the microdose product that was launched with Nature's Heritage, combining functional mushrooms and cannabinoids. How did that product come to be? Is it been a data-driven approach? Are you seeing trends where consumers asking for it? It's definitely on trend. So how did that product launch?
Yeah, well, we have a great marketing and research and development team that are really out there trying to make us a powerhouse in the CPG world and be a leader in this cannabis CPG company. And our marketing team found that there were functional mushroom users that were also cannabis users. And we said, hey, this is something that we can probably create a single use tablet or product where a person can get their functional mushrooms and their cannabinoids at the same time. So that's how we came up with the microdoses. And the microdose has been really beneficial. The Massachusetts market has really enjoyed it. And even I have taken it, and I find it to be great on the health of my muscles and relaxing them and giving me the ability to deal with some of the aches and pains that I've had and be able to function every day.
Yeah, I mean, that product is definitely at the forefront, and I probably expect to see some more of those in the future.
Be able to expand it into the other states as quick as we can. I mean, we have to get regulatory approval, but we'll get into the other states, and I think the consumers will be very happy.
Yeah.
And speaking of those other states, I know last week you had a press release go out with an MSA with Tilt Holdings in the Pennsylvania market. How are you looking at Pennsylvania from a strategy standpoint within the footprint moving forward?
Yeah, it's to expand our brands. We want to get our brands in as many markets to as many customers as we can. With Pennsylvania, we met with Tilt, and their market share was being scrapped because they don't have the relationships that we do in being able to get into all of the top MSOs, and we have those relationships. So when we came up with the concept of the managed service agreement, we looked at that as a possibility to get our brands into Pennsylvania, and that will have to get state approval for. But as we get state approval and launch our brands, we'll be in there before it goes to adult use, and people will be able to enjoy our products and understand that, hey, we're here to help you be able to make your lives better every day from the use of our cannabis products.
Big opportunity if it flips to adult use, right, John?
Absolutely. I mean, we just really look forward to capturing that big market. I mean, it's already a good sized market just being medical, but think about that being just a full adult use and medical program. It would be a great success state.
You thought about just as far as growth opportunities for the company specifically if it does flip to adult use, given the fact of, like I said before, you rank very strong when it comes to your brands in the current markets that you're in right now?
Yeah, we want to be number one in every market, and that's a market that I would love to see all of our brands at the top of the market. That will just really help not just our revenue, but show that our brands are going to be here for a long time as a leader.
Yeah. Let's switch now to Delaware. I guess it was probably a good place to be on the beach if you're a tourist last weekend, because we went live with adult use, and early reports suggest the rollout actually produced a strong opening weekend. So if you have an established medical presence already there, you're well positioned to capture new market share and really drive long-term growth. So when we look at this and zoom out, what are the expectations for Delaware as it becomes more and more online?
Yeah, Delaware, we're very excited about Delaware. That was one of our first states that we were in, and we built out the very first license there, and then the second license got built out. But we built that whole operation to be prepared for the future of adult use. Well, we're here, and we're very excited to be the number one operator in that state. We have the largest cultivation and processing facility in the state. We will be the number one supplier for some time now, because the fact is everybody else has to build up to us. Even the people that have been there with the medical program are far behind us because they're limited on how much space they have. But we're really excited because we have both the wholesale, which is getting our brands into as many customers as we can. But then we have the retail, which has been number one in the market. I mean, our Lewis store, I think, was probably number one on opening day in terms of revenue and patients seen. The good comments that we were getting from our patients were that we were able to turn the patients around quickly, had a great variety of products to sell them, and that they didn't have to take a long time waiting in line. So turning those patients around and getting them in and out of the door is our customer service that we always promised, and we're maintaining it.
You had mentioned, go ahead, Chad.
I was going to say, I'd be curious. I don't have the number at the top of my head, but I don't know what the population is of Delaware, but I'd be curious to see how many tourists that they get on an annual basis. Big tourist market, especially in the summertime. Yes,
it's a very big, especially on the South Shore where our Lewis store is, but they only have just under 1 million population. And the patient count there for medical has always been very small. Then they had reciprocity. And, I hope that a lot of the customers that come down there know that they can use their medical cards from other states to be able to get without the paying the taxes, because the medical program didn't go away. We still focus on taking care of all the medical patients that need those medicines for their health.
Good point. Very good point.
Jon, you mentioned on the earnings call that Missouri was underperforming, and you were weighing your options. Can you allude to how the company is thinking? Are you, let's say, revisiting your strategy within the state? Are you contemplating exiting the state? Like, what's Missouri going to look like on a go-forward basis?
Well, Missouri has been not completely disappointing. Our products have done very well there, not as able to get into as many stores as we would have liked. Missouri has a very tight-knit community of people saying, hey, we've got stores and products to sell. You got to have that reciprocity. And we don't have any retail stores. So we can't buy anybody's product. So they're a little hesitant. And then there's like one player that owns the majority, almost 50% of the stores there. And they're very difficult to get in. So it's been a lot slower getting into that market. So we have to look at it in one of two ways. Either we have to expand and buy some retail to be able to get the reciprocity, or we have to look and see, does it make sense for us to either sell it or to leave the state, because of the fact that we just can't afford as a company to continue to drain money out while every place else is starting to pick up to break even or profitability. Yeah. As we started this conversation, we were asking, how do we maintain the profitability and margins? So that's what we have to look at, is to make sure we're giving the shareholders the best value.
Well, you're not alone in your strategy, because it's all about efficiency right now, that's the next chapter, so to speak, in this industry. And well, not so to speak, it very much is front and center. Is that kind of the mindset right now, but less is more, and focus on the markets that you're currently performing in well? Is that something that crosses the mind?
Yeah, we've got to focus on the states that are right for us. We have to focus on expanding our brands to states where we can get the biggest bang for our buck, whether it's through M&A or licensing. And the fact is that every day that we meet with people like yourself and other people interviewing us, there seems to be more and more on sale of licenses that are going to be available to purchase. So we're looking at them, making sure that they're priced right and that they're able to make us the profits that we demand for our shareholders. And we'll either do it through a licensing or M&A. Air just put up a bunch of locations in Pennsylvania for sale. I saw 3 for Air, and I saw a bunch come on for another group, and I just don't remember which group it was. But there's an opportunity for us to look at maybe getting some retail stores to expand our footprint in that state, besides managing the tilt. and we look at other opportunities that are out there from everybody. And I think that this is a sad time, but an exciting time. Sad in that the economy is so up and down, and people don't have a lot of excess cash to spend. But it's
Yeah.
opportunity in that the market is righting itself, and some of these players that over leverage themselves, unlike us, they don't have the balance sheet to be able to survive. So we're going to keep our head down, not over leverage ourselves, and stay profitable and cash flow positive.
So that's something you're pursuing then, obviously, right now when it comes to M&A or licensing deals. What's been the early take off of this announcement about entering PA? Because from an optics standpoint and on paper, when you see the market size potential, it seems like an ideal choice to enter in with like low, should say CapEx. But what has been the feedback as far as you entering into PA so far?
A lot of people have been asking why PA and how does this help Tilt? And it's a two-edged sword. We're able to go in there, manage something, get their expenses under control for them, but also get them into additional stores through our relationships. But at the same time, expand their business by bringing our top brands into a state that's really looking for something new to come in there and wow them. And we're getting in there before adult use, before they have full edibles. And we're going to have the ability to get our brands, which are well known in many of the states around them, to be able to help increase that business. So it worked for us in terms of the management fee, licensing fee, to bring in higher revenue margin dollars. So we're very excited about it.
Well, so far, like from an optics standpoint, we're seeing a lot of positive feedback regarding entering the PA market. We actually had Senator Street on about a week ago, and he was saying that if indeed there was a vote now, he does think adult use will pass. So fingers crossed that is the case, because that would be a great upside potential for not only yourself, but for the industry as a whole. But saying that, when we talk about policy, when we look at this whole narrative that's coming out of Washington, these rumors about rescheduling, one can only hope that indeed gets announced. But I have to ask, the late great founder of MariMed, Bob Fireman, what do you think would go through his mind, or what do you think he's saying right now if the rescheduling of cannabis were to be announced? Because he's one of the original OGs that got into this space across the entire sector here in the U.S. What would his thoughts be?
Bob would be thrilled, amazed, and happy. Bob was always pushing that the rescheduling was going to come at some time.
Yeah.
We're basically thinking maybe 5 years, 10 years. Well, we're at the 10 years, and I think it's time for it to actually happen. I mean, Bob would be thrilled. I mean, we've worked hard to build our brand CPG company, and that's what we're focused on. What Bob really wanted us to be is a leader in brands, and he always said that brands were going to be the future. And with the rescheduling, hopefully that leads to other opportunities of easier access and distribution across the country. So This is really for Bob in becoming the leader in the cannabis CPG.
Well, when it is announced, and if it is announced, somewhere he'll be celebrating with Frank Sinatra, a good friend of his. But I cannot believe the stories that he used to tell me, like hanging out with the Rat Pack. Pretty cool story, to say the least. You meet some interesting people in this space, but not often do you hear people that are personal friends with Frank Sinatra. It's an awesome story, but I'm sure he's got a few stories to tell you, huh?
Yeah, we do miss those stories. Those stories were fantastic. Hanging out with the Rat Pack and his bar mitzvah and stuff. It was just incredible, the people that were there.
Wild. Well, listen, I've best described this, Anthony and I've had this latest earnings season. It looks like the cannabis industry and a lot of companies, including yourself, have kind of like held their ground, held their footing. I know there was people holding their breath heading into this earnings season, but all in all, so far, it looks like it's been a positive for the industry as a whole. So one can only hope we just build momentum from this in the event that there is some policy reform. But would you best describe it like that, as far as like, the industry as a whole is holding its ground right now?
Yeah, I mean, based upon everything that I've heard about the earnings, I mean, it's nice to see that the industry is holding. I mean, these are very difficult economic times, as I said earlier, and I think we're all adjusting to it. We hope to continue to be in the growth stage while other people are going to stay a little flat, but we have our brands that we're really pushing, not just the brands of the product, but we changed our retail names across the country to Thrive Dispensaries. And that's been a great way for people to relate back to our brands, and that's one of them. And
Yeah.
the name makes it easier for people to find our stores, to find our products, and know that they're going to get that top customer service every time they walk into one of our stores.
All right. Well, good work as far as posting positive cash flow in Q2, as well increasing overall just your adjusted EBITDA, representing a 12% margin, up from 11% same quarter last year. But more importantly, tell the crew I say hi, tell Ryan I say hi. Keep up the good work, and let's see what things go moving forward. But appreciate you checking in here, John. Let's keep in touch, okay?
Thanks, guys. I really appreciate you having me on. I missed you guys.
Yeah.
Thanks, John.
Thanks, John. Appreciate your time. Hey everyone, we just eclipsed 50,000 subscribers on our YouTube channel. We want to continue to grow this community. So if you haven't done so, make sure to subscribe now. We'd appreciate it very much here at the TDR Traded Black podcast. As usual, let's keep the conversation going. So leave your comments below and we'll get back to you with any feedback that you want to learn more of. In the meantime, enjoy the rest of your day and we'll see you next time on our latest Trade to Black podcast.